This investigation of ICICI Bank has become extremely controversial because not only has the first information report, which is the preliminary first stage to launch a full criminal investigation, named Mrs. Chanda Kochar, the former CEO, for a quid pro quo in a deal with Videocon in which her husband's company was a beneficiary. But shockingly, it has named the entire senior management at that time who sat on various committees which approved that particular loan transaction. Now, what is extremely important is that the CBI report has said that all these individuals will have to be investigated. Now, this means that the current CEO of ICICI Bank, Mr. Sandeep Bakshi, has also been named. A lot of the management then are now sitting as CEOs of various prominent institutions in India, like Zareen Daruwala, who's the current CEO of Standard Chartered India, Sanjoy Chatterjee, the present chairman of Goldman Sachs Securities, Rajiv Sabarwal, who's the current CEO of Tata Capital, and KV Kamath, who's now the current chairman of the New Development Bank, which is a global development bank. Now, the issue really is that as per the RBI's fit and proper criteria for directors, if any of the directors have been named in any criminal prosecution, whether it be pending or commenced or resulting in any conviction, it makes them ineligible to be a director on a bank. Now, if you strictly were to look at these guidelines, even the naming of these individuals would mean that they will have to step down if they were a CEO of any bank, which really means that the current CEO of ICICI Bank, Mr. Sandeep Bakshi, will have to step down, as will Mrs. Zareen Daruwala, who's the current CEO of Standard Chartered Bank. So just because they have been named, it has created a lot of controversy now in the Indian press because many individuals and prominent press editorials are stating that this is regulatory excess and they should not have been named because there is no evidence in the first information report filed. But nevertheless, the fact that they have been named implies that, in my opinion, that they are not fit and proper to continue as directors in their present assignments. So this means that there are a lot of many institutions which will have a crisis of leadership now at the top. Now, the issue is really twofold here. One is that the regulator was very clear that they did not want Mr. Rana Kapoor to continue, who's the founder CEO, as on the board as a CEO. So there was naturally a concern in the stock market on leadership continuity because all these enterprises really are all driven by the promoter when they are the CEO. A very similar thing is also there in Kotak Mahindra Bank with Mr. Uday Kotak. So once you ask the promoter CEO to step down, the issue was who would replace him. Now, what we have seen is that Mr. Ravneet Gill has been appointed and approved by the regulator as the next CEO of Yes Bank, and he's currently the Deutsche Bank India CEO. Now, his name was leaked out in the press, for some days before the actual announcement. So, therefore, his confirmation should not have come as a surprise. But the share price has reacted positively by about 12%. Now, the issue is, it is not just a question of a new individual occupying the seat of CEO, but whether this individual is going to be independent or will be allowed operational freedom, even when the founder is not on the board. Because typically in India, we have seen in all companies and even banks that when the founder is told to step down, he has already put in place his members on the board, and actually it is managed by remote control. Now, the issue is As of this moment, one does not know how Mr. Gill will have, whether he will enjoy the operational freedom, what the regulator expected him to do. So, which means we have to really see his future actions. And in such cases, it is extremely important and imperative that Mr. Ravneet Gill recruits senior experienced bankers from outside Yes Bank and gets them into some of the critical posts in within Yes Bank in areas like credit sanctioning and monitoring, risk management, operational risk and compliance, because these are the areas which, in my view, were deficient. Now, if he's allowed to bring in senior people and therefore who will directly owe their loyalties to him, then one can safely conclude that he is independent. But if he continues with the existing team, it is a very clear sign that he does not have operational independence, and therefore the same issues that have plagued Yes Bank will continue. Kotak is a true test of cronyism because here we have a case of a very powerful banker who obviously enjoys considerable political patronage, who over the years has got a special dispensation from the regulator, the Reserve Bank of India, which has wanted to reduce all founders' stake in their banks to 15%. Kotak's stake is 30% currently. And he's so exceptional that he has been allowed to continue to have a high stake without any regulatory censor. And last year I was practically the only analyst on the street who went public on this, that he seems to be the blue-eyed boy of the regulator, and therefore the regulation has to be agnostic to everybody. You cannot have one bank and one founder defying the regulator and getting special regulatory discretion, to continue with his high stake. Now, because his share price has increased significantly, he has got undue gains, which is extremely considerable. And now, when the regulator started tightening up and insisting that he bring down his stake to 20% by the end of December, he has publicly refused to comply with it and has even taken the unprecedented action of taking the banking regulator to court. Now, this is truly an unprecedented action by any bank in any jurisdiction because you're directly challenging the authority of the banking regulator. Now, mind you, in a democracy, it's his right to go and approach the court. But normally, in any jurisdiction, that is your very last resort because you don't want to upset the regulator. But here again, we've seen, although the High Court has refused his stay for any penal action by the regulator still can very much fine him for not complying. But we're already 28 days into January, and the regulator has shown absolutely no inclination to fine and penalize him on the argument that the issue is in court. So, this is a very strange situation where, according to me, this is a prime example of cronyism where there is the regulator is apprehensive of taking action on a very prominent bank just because the matter is in court. And as a result of this, all banks in India can take the regulator to court, and because it's in court, no action will be taken, which is preposterous. Nobody in the analyst community and even in the business media, likes to highlight this because it jeopardizes corporate access to a very prominent bank. The HDFC Bank has really, I think, been a truly remarkable bank amongst probably all global banks because of its phenomenal consistency in reporting earnings, which are very impressive quarter on quarter for the last, 20 odd years. In addition to that, they have maintained asset quality. issue with HDFC Bank and its CEO is that the CEO has been the CEO since inception, will have to retire and step down. And now we'll have to see when his successor comes in, how will this bank manage? Will they firstly take a CEO and recruit him from outside, or will they take an internal candidate? Now, surprisingly, the internal candidate who we all thought was going to be groomed for the job, it appears was for whatever reason was not considered the appropriate replacement. So in all probability, it appears that the bank will look for someone outside. Now that I think will be a critical juncture in HDFC Bank's history of whether an outsider can come in and continue with the performance of Mr. Aditya Puri. Because today what we have seen and what we have even seen in HDFC Bank is that the NPAs are rising rather quickly, although as a percentage of assets it still remains low because of the state of the broader economy. So we will have to really see. And as I also pointed out in one of my research notes, HDFC Bank as a strategy has now started emphasizing unsecured loans, which is indeed a high risk strategy to maintain the kind of hefty margins that they maintain. Now, in this context, when a new person joins, will he be able to continue the kind of earnings growth as well as the very low NPAs in the future? So that will be a big question mark about HDFC Bank's future. Now, I don't think the exposure has been discounted adequately because what we have seen is that in the last 1 year, the NBFCs grabbed huge market share from banks, and the business media and the analyst community regarded this as a very positive sign for the NBFC's future. But actually, what was happening is that the banks, because of the broader problems in the economy, were not growing in that space as a matter of caution. And because the NBFC's cost of funding is higher than banks, and mainly they're getting their source of funding is from the banking industry, they were taking on high risk clientele on the asset side because their cost of funding was higher. This is a really a classic case in banking terminology of what we call adverse selection. Now, as a result of which, what I suspect will happen is that their asset side is going to be much higher risk than there in the banking industry. And since they have an asset liability mismatch, which they were taking short term funds and lending them long term, and when the ILFS problem squeezed funding to the entire NBFC space, it became a liquidity issue for the non bank finance companies. Now it appears that that has been partly resolved, but I don't believe that. I think the market has underestimated the extent of the asset quality problem because, according to me, the assets that they've been putting on their books for the last 1.5 years is far more high risk than in the banking industry because their higher cost of funding has forced them to enter this kind of higher risk lending. And I think that the market is underestimating, and their problems are going to start surfacing very soon. See, one very clearly, there has been a crisis of leadership, which shows the complete failure of the boards to groom adequate talent for the succession issues to be, to get resolved. And this particularly stark in HDFC Bank, which has been totally non-reported on by the media because this really is a failure of boards. And even from what we are seeing with corporate governance, that the boards are not sufficiently independent of either the founders or when there are no specific founders, the executive senior management. And they seem to have the only interest in protecting the status quo and not the shareholders. Because normally the founder shareholders are a minority anyway. So we have a strange situation in where the board seems to owe its loyalty to the minority founder or the executive management which holds marginal equity stakes. and they seem to totally ignore the interests of the majority of the non-promoter, the non-founder shareholding. And what is particularly disturbing is that despite some of the private sector banks having very significant foreign institutional shareholding, they too don't seem to be very bothered. Because one of the whole ideas of opening up the banking sector for foreign investment is that they would have come and enforce a market discipline on these banks. But I'm very sorry to say I don't see that happening. So, in my view, going forward, the corporate governance issues will prevail. The boards actually failed in their responsibility, and it was really the regulator which came in and saved the day for the shareholders. Therefore, what it tells me is that going forward, the regulator has to play an extremely important role and a very intrusive role in the banking industry, because what we are seeing is that the necessary action that should be taken by the board and by institutional investors is not happening, which is very strange because this is what capitalism is all about. This is what the free market is all about, that the shareholders will discipline and correct management if they stray from the path. But we are seeing the actual opposite because of the malpractices which are going undetected or business strategies which are not working. It is the regulator which is being intrusive and trying to rectify the thing. And in some cases, where you have very powerful founders like Kotak, they're even able to, prevent any such regulatory action on them. So these are the issues, in my view, which both institutional investors and as well as other investors should actually closely examine and try to assert their authority on the executive management. What we have seen in the case of Axis Bank, Yes Bank, and to a certain extent in even Kotak Bank, that if it had not been for regulatory intervention, the CEOs who have been associated with fudging the books, running up huge asset quality problems, if it had been left to the board and to shareholders, they would have continued and would have got extended terms, which actually that's what the board did. Despite all these problems, the board renewed their faith in the CEOs and even gave them fresh terms. And it was the regulator who stepped in and sorry and said that we're not approving the fresh term and you have to find somebody else. And that is why today that you're having new leaders in Axis Bank as well as in Yes Bank. Now, if it had not been for the regulator, this would have continued because shareholders also didn't seem to mind, surprisingly. Now, coming to your question on the elections, I think it is very clear that because of the mass rural distress as a major failing of the current government, where the bulk of the population lies in India, is in rural India and in farming and in very small and micro industries, which has been totally ignored by government policies. So whether as an in or whichever new government also does come in after election, I have no doubt in my mind that you will have to address the problems of the farmers and of the small and medium enterprises, which are extremely employment intensive. And therefore, you will most likely see bank funding to them being increased. Now, such funding the stock markets normally do not like because they view it as being, future NPAs loosening credit discipline. But to my mind, it is extremely imperative because finally, for any democratic government, you have to check and you have to monitor and try to improve the welfare of the bulk of your population. So I see in this election year not only this government trying to do some last minute job measures to increase bank credit to these sectors, but any new government, and even if the current government is re-elected, you will see some of these kind of subsidy measures which no capital market really likes, which are going to be introduced.